Stock futures remain stagnant as the S&P 500 and Nasdaq retreat from historic peaks. Here's what's really driving the market's uncertainty. Traders navigate the floor of the New York Stock Exchange during the Alliance Laundry Holdings Incorporated IPO on October 9, 2025, a day that underscored the market's cautious mood. Michael Nagel, Bloomberg, Getty Images. Stock futures showed minimal movement on Friday, following a slight pullback in both the S&P 500 and Nasdaq Composite from their record highs the previous day. While S&P 500 and Nasdaq 100 futures dipped marginally, Dow Jones Industrial Average futures managed a modest gain of 22 points. The federal government shutdown entered its 10th day on Friday, with no resolution in sight. The Senate's seventh failed attempt to pass a temporary funding bill on Thursday highlighted the deepening political gridlock. With Republicans and Democrats at an impasse, investors are left without critical economic data, making it harder to gauge market direction. Earnings reports from Delta Airlines and PepsiCo on Thursday provided a glimmer of optimism, reflecting strong consumer demand. Yet, these positive signals weren't enough to sustain a broader market rally. Despite the recent dip, the S&P 500 and Nasdaq are still on track for slight weekly gains of 0.3% and 1.1%, respectively. The Dow, however, is poised for a 0.9% decline, though Nvidia's recent rebound has softened the blow. After CEO Jensen Huang's remarks about surging computing demand, Nvidia shares climbed 2.6% this week. Markets are in a tricky spot right now, noted Fundstrat's Tom Lee during CNBC's closing bell. Without government data, we're essentially flying blind. But here's where it gets interesting. Next week's earnings season could shift the narrative. Major banks like Citigroup and JPMorgan are set to release their third quarter results, while Friday's University of Michigan Consumer Sentiment Report may offer rare insight into economic health amid the shutdown. The controversial twist: could the shutdown derail the Fed's next move? Crisafulli of Vital Knowledge warns that the prolonged shutdown isn't just delaying data, it's threatening the Fed's ability to make informed decisions. The longer this drags on, the more it risks distorting key inflation figures, which could complicate the Fed's October meeting, he said. With the next FOMC decision looming on October 29th, the stakes couldn't be higher. Levi Strauss, strong earnings but tariffs loom large. Levi Strauss shares tumbled nearly 8% in after-hours trading, despite beating earnings expectations with $1.54 billion in revenue and 34 cents per share. The drop reflects growing concerns over potential tariffs under the Trump administration, a reminder that even strong fundamentals can't always outweigh political risks. Still, the stock remains up 42% year-to-date, proving resilience in a volatile market. What's next? As stock futures hover near flatline, all eyes are on Friday's consumer sentiment data. Will it provide the clarity investors crave, or will the shutdown's shadow continue to loom? What do you think? Are markets overreacting to the shutdown, or is this a sign of deeper instability? Share your take in the comments.